I'm Toni Janko. Thank you for joining us for today's video. In our last video, we discussed the Home Ready, Home Possible program. Today, we're going to discuss interest rates and how they affect your monthly payment. Joining me today is my partner, Toni Eads, and our preferred lender partner, Brandy Jones with Union Home Mortgage.
So throughout the home buying process, we tend to use a lot of terms that you may or may not be familiar with. Brandy, let's start with the explanation of what interest rates are.
Sure. So a mortgage interest rate is a percentage of the loan charged to the borrower. Simply put, it's the money the bank makes off the customer for loaning them the money.
So tell us what factors influence the interest rates.
So generally speaking, interest rates are determined by the loan amount, the percentage of the down payment, the loan term, and the borrower's credit score, as well as some other factors depending on the unique circumstances of the loan.
So in a previous video, you mentioned how interest rates may differ depending on the loan types. Tell us more about those differences.
Yeah, exactly. So FHA and VA loans tend to have slightly lower interest rates than conventional when all other factors are the same.
So tell us how the length of the buyer's mortgage term can also affect the rate.
The rule of thumb is that the shorter the loan term, such as 10 or 15-year mortgages, the lower your interest rate is going to be. But you'll have a higher monthly mortgage payment. So as long as you're okay with that, that's a great option for buyers who may be trying to pay down their loan quicker but don't mind that slightly higher monthly mortgage payment.
So tell us how a person's credit score affects the mortgage interest rate as well.
Well, the buyer's credit score can have a huge impact on their interest rate. Typically, the higher the credit score, the lower the interest rate.
Now, everyone seems to get focused on their interest rate and wanting the lowest rate possible, of course, but share with us how the difference 1/8 of a percentage will make in a buyer's monthly payment amount.
That's a great question. So the difference is surprisingly small most of the time. For example, on a $180,000 loan, a difference of 1/8 of a percentage rate would only be about $13 a month. So the main thing to remember there is don't let that stop you from investing in a first or next home.
So Brandy, let's say someone's interest rate is higher than what they had hoped for. Is there a way of getting a lower rate for their upcoming purchase?
Yes, so buyers always have the option to buy down their rate. By that I mean they can pay a percentage of the loan amount to get a lower rate. This is often called discount points. Now the term discount can be a little deceiving because you're not getting a discount. In fact, this is the amount that you pay in order to get a lower rate. This is paid at closing and it's an additional closing cost.
So interest rates are a lot like gas prices. They do change throughout the day. So when you're asking your lender or realtor what the rates are, there's more that goes into it. Brandy can always provide you with an estimate by knowing your loan amount, your down payment, your credit score, but you would need to keep in mind it could change up into the point where you lock your rate.
Thanks, guys. It looks like there are many factors that can influence a buyer's interest rate. But since rates are at or near historic lows, an increase of 1/8 of a percent or 1/4% really won't make much difference in your payment. So make sure to keep an eye out for our next video where we discuss cash out of pocket. Thanks.